Hi, it's Dwyer. GamblersAdvisory.com, a free site. KeepingItFree.blogspot.com, a free site. Nothing I say in this video should be construed as investment advice. Your operating assumption should be that if I mention a stock or a crypto, that I either own it or I'm thinking of owning it. Please do your own due diligence. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now, folks, the knowledge we have collectively as a society changes over time. Right? Many of my subscribers here are sports fans in football. Before we became fully aware of analytics, it was heresy to go for it on fourth down and more than an inch. Right? If it was fourth down and 2 inches, you didn't go for it. Right? Folks, that's during my life. Right? That's during the 80s and 90s. It was heresy to have a quarterback who wasn't at least 6'2", 6'3". Right? You had some shorter quarterbacks back in the day, Fran Tarkington, but they were rare. Now, of course, you have shorter guys getting picked first in the draft. Right? Kyler Murray, for example. Let me also say, too, the NFL itself would market tapes of big hits, right? Guys like Chuck Cecil, Atwater, guys who could really, Kenny Easley, guys who could really put a lick on you. Their best licks were put on video cassettes by the league. Right? We had no idea about CTE. I was once watching a Raider game. A Raider got knocked out. He was on the field unconscious. They came out, they revived him using smelling salts. Right? He left the game for a while. He then got back in the game. This is a guy who was knocked out on the field of play. He returned to the game, continued playing. Now, of course, with analytics, some coaches will go for it on 4th and 2 on their side of the field. Right now, of course, with people aware of CTE risks, our assumption is that the helmet doesn't properly protect the head. Right? Big hits shouldn't be celebrated to the point of marketing them. There is a CTE risk. We understand guys don't have to get knocked out to, over time, develop CTE problems. We even know now that, head trauma can actually cause what's called Lou Gehrig's disease. Right? We didn't figure that out until relatively recently, right? Our knowledge base has evolved. Now, let me just say, there is a great interview online. I want everyone to consider listening to it who's into economics. I know when you hear guys talking about markets and, academic type stuff, it sounds like a complete waste of time, right? Sounds like it's coming from left field. But these academic disputes can actually make you a lot of money, right? If you sit there and you figure out that the way people have been doing things is incorrect, that there's a better way to analyze the situation, that maybe on 4th and 2, right, not 2 inches, but 2 yards, maybe you give yourself a better chance of winning, especially if you're behind and it's the second half of a game, than you would by punting the ball, right? Maybe trying for the field goal from not 40 yards out, but 52, 53 yards out might give you a better chance of winning the game. Maybe actually going for the 2-point conversion maximizes your chance of winning. You have to listen to these new ideas. You have to judge them. You need to ask yourself, is the Phillips curve, something they teach econ majors, actually something that is real in the real world? Right? Understand, people like Jim Rickards don't think so. So let me just say, you have that rare 5-star economic interview where someone adept at economics challenges some of the principles. In fact, during the interview, he even takes exception with the causes of the 1929 Great Depression, as well as some of the comments of great investor Ray Dalio. Right? The person being interviewed is the editor of RealClearMarkets.com, John Tamny. Right? Please go to RealClearMarkets.com. You can read his work. And the interviewer, who is very quick and who challenges Tamny and who asks questions that someone who is well versed in the current consensus of economics would ask. David Lynn, right, does a masterful job of getting information from the interviewed. Well, let me just say, there's a group out there. Thomas Sowell is a member of this group who believes that FDR, right, who's on the Mount Rushmore for Democrats, of Democratic presidents, right? You think about a progressive president, you think about someone who took the bull by the horns. Just understand, a member of his family, right, a distant cousin of his, Teddy Roosevelt, who was president of the United States, came up with the square deal. Right? You get to the Great Depression, FDR gets elected, FDR comes up with something he called the New Deal. Right? Some would argue, if we can go there, that the square deal was better for America than the New Deal. Well, just understand, John Tamny, Thomas Sowell, many others, the Mises Institute, and these are names you want to look up. They believe that FDR, by being interventionist, by trying to improve things in the United States through government policy, actually prolonged the Great Depression. Right? Understand, markets can be self-healing. Right? You see a downturn right now in several areas in housing prices. Right? Housing in a lot of areas are becoming more affordable because mortgages are more expensive. The cost of houses has escalated over time to where it's an elevated multiple of the median salary in areas, right? Families can no longer afford homes. Also, technology has changed the home equation. Right now, I can work from home using a laptop. Do I need a house that's close to work? Can I save money being farther away from work? If my employer allows me to work from home, right? Just understand things change over time. Tamny, in this interview, challenges the causes of the Great Depression as well as the solutions. Understand, what's clear is that the stock market is flat from, let's say, 1929 until the early 50s, right? Ray Dalio, interesting person. Just understand, Tamny opens the door to the idea that someone could be a great investor, have made hundreds of millions of dollars off of investing, but not understand some aspects of economics, right? I can tell you a story. It's a football story where Dan Marino, young Dan Marino, second year in the league, throws for more than 5,000 yards. I believe that was the record at the time. So you had a quarterback guru who, ironically, was the head coach of the team that beat Dan Marino in the Super Bowl that year, right? It's Marino's only Super Bowl appearance. Bill Walsh, right? Bill Walsh, of course, is, the teacher of Joe Montana. Bill Walsh, of course, gets Steve Young out of Tampa. He was playing for the Buccaneers. Makes him a 49er. Steve Young, of course, goes on to win the MVP, goes on to be a Hall of Fame quarterback like Joe Montana. Well, understand, in the 80s, Bill Walsh sits down with Dan Marino. Bill Walsh wants to figure out the theories Dan Marino is using to be as successful as he is. Right? Walsh has this entire construct of how to read defenses, where to throw the football, and stuff like that. And you know the rest. Walsh, after talking with Marino, was astonished. Marino was one of these see the open guy, hit the open guy quarterbacks at the time. Right? So Walsh, and it's in an NFL film featuring Bill Walsh, talked about how, Marino didn't adhere to any of the theories that Walsh had. He was what Walsh called a natural. In other words, you can have these intellectual constructs and then have the person, Larry Walker in baseball, who isn't even looking at the rotation of the baseball, which is what people like Hank Aaron did, Barry Bonds did, right? To figure out, is this a fastball? Is this a curve? Is this a slider? No, Larry Walker, according to him, was a see it and hit it guy. One year, I believe Walker hit 370. Right? So let me just say, I firmly believe that someone could be a great investor over time and have some bizarre thoughts about the economy. So you can imagine, Tamny is challenging traditional thoughts on what's inflation. Right? And David Lynn actually asks him questions, right? Because Tamny has a view, and I actually agree with Tamny, that in great times, bull markets, where people are making a lot of money, that's not necessarily inflationary, right? Prices can be dropping, right? I've made videos here online where I've mentioned that Amazon Grocery right now in my neighborhood can deliver food to, my place for less than it would cost me to shop at a local supermarket. Right? I'm astonished at the prices. And keep in mind, it's not like I'm shopping at, Sprouts and Whole Foods. Right? I'm shopping at places like Target supermarket. And still, they can't match the price of Amazon Grocery. I don't even know why people would go to supermarkets. Now that I know I can, look things up online, right? I'm not one of those people who needs to squeeze the vegetable, smell the vegetable, right? So let me just say it's a fascinating interview. Again, it's David Lynn interviewing the editor of RealClearMarkets.com, a free site, John Tamny, right? If you're of a certain ilk, right, Tamny is speaking truth. And it's not the orthodoxy right now, right? Understand, I talked about housing becoming more affordable in some areas, but yet, rather than let markets work, the city of New York just elected a Democratic socialist who wants to take over the means of production. Back in my day, we call that a communist, who ran on a platform of making housing more affordable. Can the government really do that? Can't markets do that better? Aren't markets doing that better right now in several parts of the United States? Well, anyway, let's talk investment ideas. And again, I want people to do their own due diligence. Trust no one, including me. China has been reporting its gold buildup for years. Now we know that they actually have built up their gold reserves far higher. I'm talking about far higher, right? Several tons more than was reported. So, folks, understand gold is finite. Maybe not as finite as Bitcoin, but gold is finite. When you hear that a world power actually has, much more gold than it had previously reported, you need to think in terms of gold being scarce. You need to think of this as upward price pressure on gold, right? Just Google the story, right? China gold reserves higher than expected. You'll be surprised what comes up, right? Here in the United States, let's just say if we're serious about competing with China, we're going to have to up our gold reserves, aren't we? Just understand that, as countries interested in gold reserves, and some are not, right? Canada right now hardly has any gold, right? But just understand, if you're in the gold reserve game, the United States needs to match what China's doing. This is a clear move toward ending the dollar's run as the reserve currency. So, folks, if you're an investor and you're worried about the market, the Buffett indicator is elevated. The Shiller PE index is elevated, right? Just understand that gold, which was a great investment before, is even more of a great investment now. Let's switch briefly to crypto. Let me make a point here. Stable coins. We understand the use case for them, right? Let's say I have BNB coin and I decide to sell that because there's been some price volatility, right? A lot of crypto has been dropping. Bitcoin, Ethereum, they've been dropping, right? So the theory on stable coins is, all right, the crypto I have is dropping in price. I'm not a long-term holder. I just want to, park this someplace stable, right? Let me do that with some coin, a stable coin, that's backed by U.S. Treasuries, right? That's the thought process. The issuers of the stable coin, and you have different types of stable coins, but Typically, the issuers of the stable coins are making money off the interest that they're receiving from the U.S. Treasury. Right? You get to know that you have swapped out of an exotic, volatile crypto into something backed by dollars. Folks, your stablecoin is only as good as the collateral backing it. You understand that. So if you view the if you view the dollar as unstable, as losing value since 1971, considerable value, right? If you know your history, then you realize you can't have something called a stable coin backed by an unstable currency, a devaluing currency. What I believe is going to happen is that I believe, and I'm not going to call it Mr. Market, because Mr. Market sounds too impersonal. I'm going to call it Uncle Market, right? I could call it Auntie Market, right? But let's just say you understand that Uncle Market long term, not now, when people barely know what a stable coin is, right? But long term, Uncle Market is gonna choose cryptos backed by gold over cryptos backed by fiat currency, right? That's the reality. You know, that's where we're headed. If I'm getting rid of a cryptocurrency and I need a store of value, right? Something outside crypto. Well, if it's backed by gold, that gold-backed stablecoin, long term, is going to appreciate relative to fiat. Why would I get into fiat currency, a stable coin backed by fiat currency, when gold has appreciated greatly versus the dollar since Nixon took us off the gold standard? Right? So just understand the market is going to pick gold-backed stable coins. Folks, if you don't know, Tether, believe it or not, one of the dominant stable coins out there, has Tether Gold. Right? Also, if we're dealing in the world of crypto, you can swap from one coin to the other in just a few clicks. In other words, let's say I have BNB coin. By the way, that's one of my favorite coins. And let's say I swap into Tether Gold. And that website is gold.tether.to. Please give it a look. Gold.tether.to. Then I go to a Starbucks. And, let's say they're more built to accept regular Tether, right? Or let's say they have the Lightning Network. This is what's happening now, thanks to Block, right? Let's say they have the Lightning Network, and I can then just convert my Tether Gold into Bitcoin, so I could pay for that latte at Starbucks. Right, folks, understand, while my wealth was in gold, if gold jumped, and gold right now is over $4,000 an ounce. If gold jumped, then my wealth jumped. It didn't track the dollar, it exceeded the dollar. Right now, of course, there's risk involved. If gold fell versus the dollar during the time in which I had my wealth in the gold-backed stablecoin, then I lose money. So you have to ask the question, over the longer term, Does gold appreciate or depreciate versus the dollar? If the answer is it appreciates, then you're better with Tether Gold than you are fiat backed stablecoins. Right now, if you get into stablecoins, it's a little bit more complicated than that. You actually have coins like Athena that pay interest, right? That are backed by US treasuries. But just understand, folks, long term, I believe Tether Gold wins out in the stablecoin market. Just be aware of that trend. It's not apparent right now. Let me add a few more footnotes before I hop off here. You know, Google upgraded its AI Gemini, right? So now when you search, you can get Google's most advanced AI responses. So Google is leveraging its search, and it's providing you with premium AI products in the search. Right, folks? Ultimately, there's going to be consolidation. Just like there were with the railroads, just like there were with automobile companies, right? Just like there has been in rental car companies. There's going to be consolidation with AI companies. You have to figure out who the survivors are going to be. Right? Let's be diplomatic here. Folks, Google search gives Google such a huge advantage over its competitors. I'd be surprised if Google's not one of the survivors in the AI space. Let me say this too. We talk about the Mag 7. Folks, these companies are diversified. Right? Microsoft recently announced their numbers. Right? Microsoft's down since announcing numbers. I want folks to realize that the forward PE on Microsoft is around a 31 right now, which historically is advantageous for Microsoft, right? Just understand that part of Microsoft's earning announcement involved the fact that their cloud computing has so much demand that a Goliath like Microsoft can't fill it. Right, folks? You're an investor. You're looking for companies that have customers lined up, right? That has Uncle Market loving its product so much that the product is in heavy demand, right? Heavy demand. Folks, that's Microsoft right now. And you're getting Microsoft at a reasonable price based on forward PE. Let me point out, in the Mag 7, Meta and Google are cheaper. Right? So, as I've said here in the past, you know, it's not a stock market. It's a market of stocks. As the market adjusts, and there are red flags all over the place, right? The repo rate is troublesome. There have been some private equity stories where companies like BlackRock have, you know, taken losses and things like that. But just understand, you know, when it's raining, if you see some companies holding umbrellas that have a base, right, that are diversified, you know, let's say I want to pick the winner in AI, which companies have businesses that can subsidize the capital expenditures they're making to develop their AI? Right, folks? Microsoft, you may have heard of Microsoft Word, Office 365, Microsoft Excel. Just think about the power of that brand, right? You factor in the idea too that, Microsoft is involved in autonomous vehicles, right? They're, doing a lot of work behind the scenes for car companies, developing the autonomous vehicle system. And of course, their cloud computing part, Azure, is on fire, right? They can't even serve all the customers who need service right now. They're going to have to expand that wing, which is expanding exponentially as it is, right? So let's just say pay attention to forward PEs, spot winning ideas, even when they're not popular in the market, right? Again, talk with your neighbor. If you mention stable coins and they're looking at you, puzzled, just understand, okay, sometimes it takes a longer period of time for people to spot the great idea, right? In my household, we were watching streaming on TV, right? Then I subscribed the family to YouTube TV. No one used it. I mean, no one used it except for me, right? So, of course, I was there. I was explaining YouTube TV to everyone. No one was interested, right? They had a powerful system of just grabbing the remote, clicking it, finding their show, watching it. No one wanted to hear about saving the show, right? No one wanted to hear about automatic recording. It took a year, a full year, for, the teens in my household to figure out the capability of YouTube TV. Suddenly I turned on YouTube TV and I saw all these other profiles. It took a year. You, the investor, need to figure out that gold beats fiat currency. If there's a gold-backed stable coin, folks, that's going to be one of the winners, right? There'll be consolidation in the space. Maybe there'll be some other gold-backed stable coins, right? I believe I own a gold-backed stable coin that's on Uphold that's different than Tether Gold, right? That's a Uphold exchange type specific gold coin. But just understand, Tether is a big name. Tether has more U.S. bonds than the country of Germany now. Tether's growing by leaps and bounds. You have the power of a brand. And they, of course, are now issuing a gold-backed stable coin, right? Figure out who the eventual winner is going to be. Also figure out the benefits, particularly if you're going to have wealth in stable coins for some period of time. You know what the dollar's going to be worth, right? Less than it was less than it was last year, right? You understand that gold has had a bullish run of it. And if central banks like China's are accumulating gold and doing part of that in secret, right? So they can pop out of the weeds and say, we have this much gold. We're off the, using the dollar as, the reserve currency. Just understand, if central banks are accumulating gold, if the U.S. has to match, because we're competing with China on everything else, you need to think to yourself, this is going to be increased scarcity. This is going to drive up the price. Tether Gold, folks. Give it a look. The website is gold.tether.to. Those are my thoughts. Let me hear yours in the comments section of this YouTube video. Thanks for stopping by.